If you're running a business in India, you know GST is a big deal. It's just part of the landscape. But in the middle of a crazy week, it can be really easy to let a filing deadline just slip by. So what actually happens when you do? We're about to dig into the real cost of missing a GST return, and trust me, it's more than just a late fee. Right. It seems like a simple question, doesn't it? But the answer is, well, it's complicated. Missing a GST deadline isn't a single event. It's the start of a chain reaction. It's a cascade of consequences that can hit your finances, your day-to-day operations, and even your business's ability to exist. So let's get to the bottom of it. Okay, first, let's do a super quick refresher so we're all on the same page. A GST return is basically a report card of your business's finances for a certain time period. It's how you tell the government, hey, here's how much I sold, here's what I bought, here's the tax I collected for you, and here's the tax I already paid. Simple as that. And here is the single most important thing to remember. This is not optional. I'm going to say that again. It is not optional. Every single business registered under GST has to file returns, even if you had a slow month and made 0 sales. Zilch, you are still legally required to file what's called a nil return. There are absolutely no exceptions here. So you missed the due date. The very first thing that happens is you start losing money. The clock begins ticking, and the penalties immediately start piling up. Let's break down exactly what you're going to have to pay. Okay, so here's where it gets a little tricky, and a lot of people get tripped up. It's not just one penalty, it's a double whammy. First, you've got the late fee. Think of this as a fine just for the act of being late. Then, on top of that, you've got interest, which is a percentage charged on the actual tax amount you haven't paid yet. 2 separate hits to your wallet. For the most common returns, like your GSTR1 or GSTR3B, that late fee is 50 rupees per day. That's split down the middle, 25 for CGST and 25 for SGST. Now you might think, 50 rupees a day, what's the big deal? But let it slide for a month, and that's 1,500 rupees gone. That's money that could have been inventory, marketing, anything else but a penalty. But the interest, this is where the cost can really, really balloon. It's calculated at 18% per year on whatever tax you still owe. The longer you put off paying, the more this interest just grows and grows, making your total bill much, much higher. This table lays it all out pretty clearly. For your standard returns, yep, you're looking at that 50 rupee daily fee, but I want you to look at that nil return column. This is the trap that so many new businesses fall into. Even if you made absolutely no money, you are still on the hook for a 20 rupee penalty every single day you don't file. The message is loud and clear. You always have to file. Now, those financial penalties we just talked about, that's just the automated system doing its thing. If you continue to ignore your filing duties, well, that's when the government starts to take a more personal interest in your business. And you know what? This process moves way faster than you might think. This timeline isn't speculation. It's pulled directly from the government's own procedures. Just 5 days after the due date, you'll get an official notice in the mail, Form GSTR3A, giving you 15 days to sort it out. If you don't, a tax officer can literally just assess what they think you owe based on their best judgment. And if you still don't respond, formal recovery proceedings can begin. It escalates quickly. But this is where the consequences go way beyond just fines and notices. We're now talking about things that can genuinely paralyze your business, stopping you from operating day to day. Take a look at this quote. It comes from a real high court case. A business owner got some bad advice from their consultant, and it led to some incredibly severe consequences, including having their bank account completely frozen. It's a really stark reminder that who you listen to for advice matters a lot. These are the kinds of things I mean when I say operational nightmares. Your input tax credit, it gets blocked, so you can't claim back the tax you paid on your purchases. Miss just 2 returns in a row, and your ability to generate e-way bills is blocked. That means you legally cannot move your goods. And like we saw in that court case, yes, they have the power to freeze your bank accounts, and if it goes on long enough, they can cancel your GST registration completely. Game over. And then there's the hidden cost, the one you can't put a number on: trust. Your GST compliance status is public information. A potential big client or a new supplier will definitely check it. If they see you're not filing on time, that's a huge red flag. It can cost you deals and damage the very business relationships you've worked so hard to build. Okay, I know, that was a lot of pretty serious stuff. But the good news is, staying compliant and avoiding all of that chaos is 100% within your control. So let's look at the proactive steps you can take to make sure you stay on the right side of the law. When you break it down, the process itself is actually quite straightforward. It all starts with getting your paperwork in order, collecting all your sales and purchase details for the month. From there, you just log into the GST portal, pick the right form, punch in the details, pay whatever tax you owe, and then officially file it using a digital signature or a code sent to your phone. And remember, you don't have to figure all this out by yourself. The whole GST system is designed with support channels. You've got the official GST help desk, self-service portals, detailed user manuals, FAQs. There are tons of resources out there to guide you if you get stuck. And this brings us right back to that cautionary tale from the High Court. To avoid getting that kind of ill advice that leads to disaster, seriously consider working with a qualified GST practitioner. They live and breathe this stuff. They can manage your filings, give you expert advice, and make sure you avoid all those costly, stressful mistakes. So, we'll end with this question for you to think about. Is your current approach to GST truly protecting your business for the long haul? Or is it just delaying an inevitable problem? Because at the end of the day, GST compliance isn't just about taking a box on a government form. It's a fundamental part of protecting your company's health, its ability to operate, and its credibility in the market. It's about building a sustainable future, not just dodging a penalty today.